Fellow traders, Jason here with SwingHigh.com. It is Monday, December 14th, 2009, and this is your post-market analysis. As you can see here, this is the S&P 500 tracking ETF on the 15-minute chart. We did gap higher on the S&P, came back to test this support at 111.50, and then kind of chopped sideways for the rest of the day. So most of the action was in the morning, and not too much day trading action going on today for the S&P. S&P finished up 0.7%. The Nasdaq up almost a full percent. The Dow was the loser today, only up 0.27%. The financials up 0.6% give or take, and the Russells, the true winner, up 1.5% today. Let's take a look at the market internals. The tick was definitely bullish. The trend was actually bearish today, which is not necessarily a good sign. Definitely a strange thing to see. While stocks rallied, the trend should have been in the 0.8 or lower area. That would have been a bullish sign, indicating that more volume is flowing into stocks on the rise than on the decline. Take a look here at the trend Q, which is the Nasdaq trend, and that did give a good reading, definitely a bullish reading, as you can see, under 0.8 by a mile, down here at 0.5. And then we have the VIX, which is the fear indicator, showing that fear is leaving the markets as it dropped 2% today. So across the board, things are looking bullish. I'm going to go here to the S&P 500 index on a daily chart. As you can see, today we have a new high close for 2009. This is the highest close for the index for this year. Definitely a bullish sign. You could consider that a high base breakout, although keep in mind we do have resistance coming up at 1,120, that area at least. But definitely a bullish run we've seen here. You could consider this a little extended, being up 4 bars in a row, but we'll have to see where it goes from here. If we do pull back, I'd like to see this 1,110 mark act as support, and that would confirm that this was a high base formation, and that was the higher line of that formation. Here we're looking at the Dow, and as you can see, it's a similar picture. We do have a high base type formation here and a breakout. It's not the strongest breakout I've ever seen, but it is definitely a breakout, and we do have a new high close for the year on the Dow as well. Take a look at the Nasdaq. The Nasdaq is still in its high base. Has yet to break out, but we could see it testing those highs pretty soon. And in fact, if we pull this line here down to the top of this candle right there, you can see that we're already testing the highs of that high base formation. Let's look at the financials. Financials are relatively weak, as you can see here. While the other indexes are putting in a high base and trying to break out, the financials have been pulling back for the past month or so. A break above this trend line would be relatively bullish for what it has been doing, but it would still be comparatively weak to the other 3 indexes that I just talked about. And finally, we'll talk about the Russells. The Russells, we do have this double top formation up here at the highs of 62.6 area, I guess. 62.4. If the Russells are going to be bearish, I would like to see them come back up and test those highs. So that's what I'm seeing on the broader time frame, and everything does look bullish. Keep in mind we have about 11 trading days left, 4 more this week, 3.5 the next, and then 3.5 the next after that. And for the rest of this week, we do have some big numbers coming out. Tomorrow morning, watch at 8:30 for your producer price index and manufacturing survey, and then the next one comes out at 9. So thanks for being a part of SwingHigh.com, and I'll talk to you tomorrow.